Folks, we need to talk Silicon Valley Bank. We need to talk regional banks. We need to talk what might be a very, very bloody Monday in the stock market. And of course, as I mentioned on the Sunday Daily Financial News, I want all of you to take a deep breath. We have heard many times that good times never last, bad times never last. We have heard the Warren Buffett saying, we get to see who's swimming naked when the tide goes out. You get to hear about buying with blood in the street. Well, Monday might be one of those days. And to have this conversation, we bring on the one and only Mr. Dan Bird. How you doing, sir?
Good morning. I'm doing well. How are you?
I'm doing very, very well, man. That Silicon Valley Bank, right, near and dear to my heart. One of their headquarters is right around where I live.
Right.
We had the good old-fashioned bank run. They had $42 billion extracted by clients in a 24-hour window. And when you're capitalized at 200 billion and you lose 20%, no bank can survive that because nobody has that kind of cash just readily available. What do you want to talk about Silicon Valley Bank? Because I think it could just be the start of some.
Yeah, let's start there because I think that's what's on everybody's mind anyway. Wondering what's going to happen. I did a section in my newsletter a few months ago. Maybe I should do it again. Probably should have done it this last weekend, but talking about the fractional banking system that we have and explaining what that means. A lot of people don't really understand it.
Yeah.
But I mean, that's why you have bank runs. That's why you should not have a bank run. But just the way that it's structured is very susceptible to a bank run.
Yeah, I mean, once banking is a confidence game, and once that is lost, we have seen what could happen. Again, I mean, just think about it numerically, right? A bank that has $220 billion in assets in a 24-hour window has 42 billion extracted.
Mm-hmm.
In an environment where you keep 5, 6, 7% in cash, no bank can survive that. No bank can survive losing 20% of their deposits in a 24-hour window. There's not a bank on the planet that could survive that. So this was a good old-fashioned bank run. Somebody screamed fire, and people withdrew.
Yeah, let me share my screen. I don't know if you gave me access.
Yes, I did.
You did. Good. This is kind of the outline of what I did. It's probably a few months ago now that I talked about it twice because I think it's an important concept that most people don't really get. Mm-hmm. But this is our fractional banking system. Mm-hmm. So if somebody deposits $1,000 in the bank. The bank has to reserve $100, so 10%. Mm-hmm. So the bank sets that aside. Then they have $900 in. It's really a liability. Mm-hmm. They have $900 in order to turn it into an asset. They turn it into a loan.
Correct.
All right. So they lend out $900. At this point, there is $1,900 in the system. Remember, we started with 1,000. There's $1,900 in the system. The bank has 100. Mm-hmm. So then whoever gets that 900 puts it in their bank. And it could be the same bank, but let's say if they put it in a different bank. Mm-hmm. That bank has to reserve 10%, $90. And they then loan out $810. Mm-hmm. Okay, so now there's $2,700 in the system. The bank has $190. Mm-hmm. Do it again. Take that $810, put it in the bank. Bank reserves $81, loans out $729. At this point, there's
on. Yep.
$3,439 in the system. The bank has 271 of that.
Yeah,
that is at its core, the simplest explanation is what happened.
Yep.
As long as these people that are borrowing the money, or as long as these people that are depositing the money don't go to the bank and ask for it all back, right? Because remember, there's $3,400 in imaginary money. It's not real money. Mm-hmm. The bank only has $271.
Yep.
Because of the way the reserve banking system works and this is called fractional banking.
Correct.
All right. So as long as everybody doesn't ask for their money back, and as long as all these people getting the loans pay back the loans, mm-hmm. everything works just fine.
It's a beautiful system.
It's a flawed system, but it is a beautiful system.
It's a flawed but functioning system. Yes.
Yes, it's a functioning system. It's been around for centuries.
Correct.
Now, what this does, and the reason that we get off the gold standard and we will never go back, is that by doing this, even though you got $3,400 of imaginary money and 271 to back it up, as long as everybody pays everything back, everything's fine. What that means is the economy can grow much faster than if all you had was that $1,000.
No question. This is a vehicle to spark economic growth, correct?
That's right. Exactly. And it works just fine, except for those two things. Now, in the financial crisis, the second part of that happened.
Correct. People
borrowed the money and they didn't pay it back.
Correct. They defaulted,
Right.
They walked away, cash for keys, or whatever.
Right.
Yeah.
In the case of Silicon Valley Bank, the first part of this happened.
They asked for their money back. Both break
Right.
the system.
Right. Both of them will break the system. That's what they were trying to prevent. Interestingly, in this day and age, where we have immediate communication.
Yeah.
Via
This happened
Twitter.
in 24 hours. This was wild to watch.
Yeah. 24 hours, the bank ceased to exist, basically.
Yep.
Within 48 hours. This is my newsletter. I'll put my newsletter up in a second, but
Sure.
I don't know if you noticed this one.
I did not see this one, actually.
Yeah, I kind of modified this one.
Yeah.
Started off with just this cartoon down here. It says, we thought it was a hot startup, but in reality, it was just burning the cash. Here's the bank's CEO. You could insert SVB right there.
Yep. Sell my stock. Yep.
Sell all my bank stock and options immediately, which, by the way, he did last week.
He sold 11%, but yes.
Yeah, he didn't sell it all, but he sold a good portion.
Yeah.
And then this one here is the venture capital talking to the CEO. The CEO explaining to him what his business is doing.
Yeah.
Venture capital sending a note saying withdraw all startup deposits immediately.
Yeah, it's very clear. Again, I live in the Valley. I have context throughout. It was very clear. I forget the name all of a sudden. Peter Thiel's company. What is it? Founders Fund.
Yeah,
Founders Fund. Once Founders Funds.
This little picture in this Twitter mock-up. That's
Peter.
That's Peter Thiel.
Yeah, of course. Once Founders Fund told their funds to get out, that was somebody screaming fire in a movie theater. You could argue whether there was a fire yet or not, but once he screamed fire, everybody rushed to one exit and 42 billion. And once that went out, the bank was dead.
Right.
Dead.
Yeah.
Because of this, but I want to turn this into an opportunity.
Okay.
So again, Silicon Valley banks out of business. It is still my hope that somebody buys them in totality today. Worst case by 6 a.m. Monday morning. Else, things get really, really messy. And I want to talk about really, really messy because, again, I like to make lemonade out of lemons. I think there's some very simple dominoes to look at, but I want to look for what might happen if fear takes over. Monday morning is a bloodbath at the open. I want to know, where might the baby be in the proverbial bathwater? Because I think regional banks spanked. Charles Schwab getting spanked.
Yeah.
I want to know where I should look. Should I look at financials? Should I look at derivatives? Where might I be able to buy assets on sale? What are your thoughts on that?
Well, I think there's a number of places to look or to watch. And what you want to watch for is the strongest names in those sectors.
Okay, so it is, okay, I like that. All right, I could do that.
So it's, everything's probably going to go down. Now, one thing I said in my news.
Do me a favor. Can you pull up the ETF? I don't know what it is. And if we have to look it up, I can Google search it. What is the ETF for regional banks?
KRE, I believe. By the way, Janet Yellen said they will not be bailing out the bank, Silicon Valley Bank. I
Oh,
think it's
Monday's going to be fun.
ARE. Yeah, regional banks.
So could you look inside that? What makes that up for me? Because I think there's some clearly others that are going to
Yeah, and
cease to exist.
I'll do it another way as well. But
Okay.
first, let's just look at the chart. This is a daily chart,
Let me
and
guess.
this is
It's really ugly.
very ugly. It's very interesting though,
Look at the
because
last day.
yeah. So Friday we ended with a spinning top doji, which is usually a reversal candle.
Translation for a novice, it went down based on fear. Then the series buyers came in and we kind of ended where we opened.
Yeah, it started here. It went way down here because of fear.
Down first. Yes.
It went all the way up here, almost back to the close from the previous day.
Oh, that's weird. Okay.
And why do you think? No, it's not weird. Why do you think that would be?
Oh, there was hope that it would be bailed out, probably.
Short covering.
Oh, short covering. The algorithms kicked in. Okay.
So all the shorts that have probably been short SVB for a while.
Yeah, 30%.
They made a huge profit.
Yeah.
All right. So they're covering their shorts, sent it back up.
Okay.
And when they were done covering it, sold off again.
Okay.
And ended back at the middle. But look at the volume.
Yeah, that's crazy volume.
Unbelievable volume.
Did you see what Bill Ackman said? My guess is Bill Ackman is shorting this ETF right now. That's a total wild ass guess. But yeah,
he's probably been shorting it for a while.
Probably, yeah.
Here's the chart that I put in my newsletter.
Kramer says buy. I saw that.
Yeah, I put a link in there to his.
He's had some wonderful calls.
Yeah, to his show back in January, early February or something.
Yeah,
he said Silicon Valley Bank. There's no reason that it's sold off by 60%. He was just talking about from here from $750 down to $200.
Let alone Thursday and Friday.
That's what he was talking about right here. And then when it got back up here, Kramer says buy.
Yeah, that's crazy. Well, even, I mean, let's be clear. Kramer's not the only one. Forbes just issued like 3 weeks ago or maybe 6 weeks ago the top 20 banks, and SVB was the number one bank. So these.
Yeah, I saw that. But if you were just a technical analyst, if you were just doing the technicals and you were in SVB from way back here,
yeah,
and you saw it going all the way up till the end of 21.
Yeah.
All right. Then it came down, and I've actually talked about this in my newsletter. Came down and broke below the 50-day moving average right there.
Mm-hmm.
Came back up above it and broke down again. So twice you had two chances right there. Twice it went below the 50. Now that should have been the point if people had been in from back here. That should have been the point that they got out and said, I'm just going to wait and watch this and see what it does.
Right.
All right. And it dropped way down here, down to 525. So 750 to 525. Came back up, had a nice recovery, but never was able to get above the 50 again. This is that dotted red line right there.
Right.
Never was able to get back above the 50, and then it dropped below the 200 again. So twice it dropped below the 200. So you had two chances again to get out at 625. All right. And then it went down, and it never, ever regained that 200-day moving average.
Yeah.
Never. Including when Kramer said to buy. It was still below the 200. This is a daily chart, by the way.
Yeah. Yeah, Kramer's had some really great calls over the years. This is just going to go down as one of the latest ones. But again, I want to try to find opportunity in this nonsense.
Okay.
Could you tell me who the strongest players are here? And I don't even know if it'll be regional banks that I'll play with. It might be something else.
Right. KRE Holdings. That's what I want. Just out of curiosity. I've got another way to do this too. We'll look at it in a second.
Yeah.
Top 10 holdings, First Republic.
Well, that's oh, I see it. Yep.
First Republic is number 3. Western Alliance Bancorp.
I don't know what that is.
Truist. Oops. Truist. Now that one might be an interesting one.
Yeah, I don't know. I actually don't. So let me just think of ones I know. So First Republic, I know. Zions, I know. Comerica, Fifth Third, KeyCorp, Citizen, Signature, PNC, Regionals. So there's a couple on there I don't know. I don't know Western. That's weird. Okay.
So First Republic is going to be in the same boat as SVB.
Yeah, I think so. I think the FDIC might be there already.
Right.
Yeah.
Truist actually might be an interesting one.
Yeah, I don't know them at all.
That was the combination of two Southeast banks.
Yeah, I don't think I would be touching anything I don't know in this environment, but yeah. But okay, so this is helpful. I can look this up later. But could you show me what trades kind of in correlation with regional banks? Like, I'm not sure what it would be.
Well, I think the other thing to think about is a lot of the technology companies that were doing business with SVB.
That's true. I mean, I heard about Etsy can't process claims.
Etsy's a good example. Yeah. In fact, you can look at Etsy.
Yeah, this thing's going to have tentacles, man. Oh, it's going to be bad.
So there's Etsy. Etsy can't process any payments for their customers because their money was in SVB.
Yeah, SVB, yeah.
So I'm sure there are other technology companies like that because SVB was so involved with startups and the technology industry being in Silicon Valley.
Yeah. Oh yeah.
There will be others that have their money tied up.
Yep.
In some cases, it will crush them.
Yeah, they'll cease to exist. Yes.
Right. But there are other cases where their balance sheet is strong still.
Yeah.
And they might be okay.
They'll survive the haircut. They have other access to capital to pay the bills, their operational capital. Yeah, I agree.
Right. This is the banking industry in relation to the S&P. You can see here where it fell off a cliff last week.
Yeah.
It was actually
starting the big banks. How about the big banks? And you look at like Goldman Sachs.
Yeah, so the big banks is
JP Morgan.
KBE.
Oh, okay. I didn't know they had an ETF. I guess I shouldn't be surprised.
SVB is in that one.
Oh, First Republic's in that one.
First Republic, Citigroup. There's Citigroup, U.S. Bancorp, PacWest.
All right, so a little bit of overlap there, folks.
Jackson Financial, by the way, and CMA, which was on the previous list,
I don't know.
were both in my dividend screens that I ran.
Interesting.
So if we go back here and
I'm still not seeing opportunity, but I do like that Etsy idea. And not because Etsy, the company, but what other tech companies might have a 7-day disruption in normal business, which will take a haircut, and then I could just jump on. That's what I think I hear you saying.
Yes, exactly.
Yeah, it's not about Etsy. We're not making any recommendations on Etsy, but it's look for technology providers with a interruption in normal service. And yeah, I like that. I really like that. Okay.
So this is the CMA. So CMA was in the blue chip scan.
Okay.
This is the dividend scan from VectorVest. These are blue chip companies that pay out.
And I think we looked at this. Did we look at this last week? It was up like 4%. Now it's down.
Yeah, this was up 4. This was up 4. This was up 7, and this one was up 15. This is the one that I ran. Mine's still up 6.
Wow. Okay. Cool.
6.29, and mine has Jackson Financial in it.
Interesting. Okay.
So you can see that one went down, but not significantly. And then the VectorVest blue chip scan had CMA in it, which was in that previous holdings for KRE.
Sure. Okay.
CMA was one of the banks in that one. So CMA is a strong bank, and let's see what happens with them.
Okay.
In fact, if I can look at the chart for that. So you can see they get hit along with SVB and all the banks.
Yeah.
And it's very similar. Look at the volume again.
Yeah. Can you look at JP Morgan since we're just here? Because I think it was actually up on Friday, I think.
Yeah. JP Morgan was up.
Okay.
JP Morgan was actually the beneficiary of a lot of the money that people pulled out of SVB when they could.
Yeah. So let me ask you this question. I actually put this out
on Wells Fargo as well.
Oh, really? So this is something that I think is going to happen, right?
Here's Wells Fargo. It was up Friday a little bit too.
Yeah. Yeah, so I think one of the lessons from SVB is going to be FDIC works for mom and pop, right? People who had money there, they got their money Monday, their money good. But I think what's going to happen is all these regional banks who have business deposits,
Hmm.
it will become a board level requirement not to be at a regional bank. It's you got to be at
Well,
Wells Fargo or
well,
JP
at least
Morgan.
not to have the majority of your holdings in a regional bank. I think the other
You can't even
lesson,
have operational cash there. You can't make payroll if they shut it down.
yeah, right, that's right. But let's talk about the root of all of this,
Sure.
the reason that it happened. And you mentioned Warren Buffett said, when the tide goes out, you'll see who's swimming naked.
Sure.
Well, the tide is the Fed.
Oh, it's interest rates. Yeah.
Interest rates is what caused this.
No
So
question.
let's talk about interest rates. And before we do that, this is the
Do you
slide I
want to do
want
this in a separate video or do you want to keep it here? Just curious.
to. We could do it in a separate one, but let me show my newsletter just in
Yeah.
case anybody's interested in joining. Just send me an email to breakpointtrading@gmail.com, and I'll send you last week's, which had these cartoons in it, plus that one I showed you before.
Yep.
And I'll add you to the list for future ones. This is the SVP chart that I was just talking about.
Yeah.
And this is the market implied probability of a 50 basis point rate hike. We'll talk about this in the next session.
Yeah.
We'll talk about inflation, CPI, what's coming next week in the next
Very,
session.
very cool. All right.
All right. But let's, to close this one out, let's finish
Sure.
with the VIX.
Mm-hmm. Oh, we
There's
shot
the
up.
VIX. The VIX actually went up to hit 29
Oh, it
intraday.
did.
Yeah. Hit 29 and then came back.
Okay.
This gray area here shows the close, not the high.
Not the high of the day. Okay.
Right. But it actually did hit 29 and then pull back. The next one I want to show is, this is what I call my bottom finder chart. This is the chart that I use to identify whether we are close to a bottom. All right, and I drew these, this is in my newsletter as well. I drew these two vertical lines right here, basically at the bottom of June and at the bottom in October. Okay. So in the bottom of June over here, this is the pink line, that's June's bottom. Notice where this is the percent of stocks below their 50-day moving average, the red one. And the green one is the percentage of stocks below their 200-day moving average.
Okay.
By the way, this is not a good look, this chart, for where we are right now. In October, we hit a low here, but then we hit a lower low. We took out the June low right here and then bounced back up, and then we went down in October and hit a lower low.
Yep.
But look at the percentage of stocks below their 50-day, again, went down below this, I think it's 15% line.
Yeah.
And the percent of stocks below their 200-day, which is a 20% line.
So what you're telling me is we have more room to fall.
That's what I'm telling you.
Yes,
you look at to the right-hand side of the chart, we've got a lot more room before
plenty of
that
room. Yeah.
signals a bottom. We have a lot more room before that signals a bottom. In both cases over here, the VIX was just coming off a 52-week high. The VIX is just beginning to go up there.
So I have no idea what your opinion is. My opinion is Monday's open is going to be wild, red everywhere.
I think you have to be careful with the open.
Well, I'm not touching it. I'm just, because I'll have it on. I'll be watching. And it's going to be
I think that could very well be the case. I think you could also make a case that it's going to bounce. It's going to have a big up
intraday swing
in the beginning, the first 30 minutes or so.
Okay.
Where a lot of the shorts are still covering.
Oh, okay. Short covering. All right.
And I think by the end of the day, and at the end of the day, it's all going to start sinking in.
Oh, it's going to be bad.
Yeah. So the other chart that I showed last week, this one here, this is the long-term chart. This is where I show the 3,200 level and why people are talking about that.
Do you think 3,200 is in play this week?
I think, well, I'm not going to say that yet, but no, it won't be in play this week. I don't think. No, it definitely won't be in play this week. But will it be in play? So that will depend First of all, will we take out the 38% level? That's at 38.15.
So you have to think that's in play this week.
Yes, that is absolutely in play. So I put it on these charts as well. This is where it comes from. You can see 38.2 is 38.15 right there.
So that's in play this week.
I put it on this chart right here. You can see we're almost there.
Yep.
In fact, we're almost at the low from December. Okay. So if we take out 38.15 or 3800, that also is going to take out the previous low, which was a higher low, which was an indication that we're starting a new uptrend. If it takes that out, then the new uptrend is gone.
Got it.
Right. If it takes that out, then that Fibonacci level is gone.
Yep.
And the only thing left is this June low right here at just above 3,600, but that's not a strong one. That's probably a fairly weak one. The next real support level is the low from October, 3,500.
So I'm just going to do some very rough math right now. I think a 5% move to the negative for the week is possible. So what did we come in at, 3,800? Or are we at 4,000? I have no idea. So 38.
We were at 38.61.
So 38.61, 5%. What's that? 190.
Yeah, call it 200. That's 36.
Yeah, so
37, roughly around 3,700.
All right. So do you think 3,700?
That's easy. That will be easy to do.
Okay, that's all right. Okay.
3,700 is a weak support. So 3,700 for sure. If we get to 3,700, we're definitely taking out the June low, 36.66, basically.
Yeah.
And then it's a fairly quick drop down to the October low, 3,500. 3,500 is also a Fibonacci level, the 50% level. Yep. It's also, by the way, that 3,500 where we bounced in October. That's also exactly halfway between the COVID low and the all-time high.
Do you think that's in play next week? Do you think it could be that bad?
I don't know about next week, but I think 3,500 could be in play.
Oh, it's certainly in play. I'm trying to get
this may not be a quick recovery, by the way. So when you talk about, what am I going to buy Monday? I'm not sure you want to buy anything Monday.
Yeah. Okay. That's a good point. Yeah. I should be very clear. What I will be looking for Monday afternoon, because I won't be doing anything in the morning, is I will be looking for mispriced things that are being thrown out who have, in my opinion, very little exposure or direct exposure. But again, it could be wild, but I've done this before. I've told everybody I have a little capital I want to put to play. I like to buy stuff when it's on sale. So I'll be looking, I'll be shopping.
Yeah. So here's the inflation. We'll talk about this in the next session.
Okay.
This is the inflation numbers. But
very cool.
One thing I want to point out, you can kind of see it right here with that candle on Friday. It ended right exactly at the downtrend line from the beginning of the year. Exactly. And just above that 38% Fibonacci level. So we're sitting on, a number of really important support levels, which can easily be taken out.
Oh yeah, they're very, very quickly. What if it's not support? It's resistance. Yeah. It's about to become resistance.
Right. Yeah. And you can see we draw through those two right there. Then the June low right here at 3,700 is an easy target.
So the other thing you've been repeating over and over again is I think it was 3,200. If we broke 3,200, it might cause you to give pause about your bull thesis, right? You're talking about a bull market.
Oh yeah, good question. Good segue into this. Okay. This is my bull thesis.
Right.
My secular bull.
Secular, right? Correct.
Secular bull. It won't be broken until these hit these key levels and break through them.
And these are weekly or monthly?
That doesn't mean, actually, this one here is at 36.66. This is actually at the June low right here.
Okay.
This line right here, which is the 50-month moving average. 50-month, that's like a 4-year moving average. Ever since the breakout way back here in 2011, and then the official breakout in 2013, every time we've come down, we've never closed below it. We breached it here in the COVID, but we didn't close below it.
Right.
So that is a key one right there. And that right now is exactly at 36.66. And that is exactly the June low.
That's at risk.
That's exactly the June low. So
okay.
that 3,700 level, if we break that, then I would say the secular bull thesis is probably gone.
Okay.
And if that's the case, that doesn't mean these two will get close to their levels as well.
Sure. Are those monthly as well, or are those weekly?
It's the whole thing is monthly. Yeah.
Oh, the whole
it's all
thing's
monthly.
Okay.
So this is the relative strength at the top. This is the momentum in the middle, and this is the actual price down here.
Okay. Very
if
cool.
we break through that June low, 3,700, 3,600 roughly, then we will, I think, easily get to the 3,200 level.
Yeah.
Won't happen next week, but
right.
I think we could be headed there. And by the way, if that happens, if the secular bull actually gets killed by this, then a new secular bear market starts. And we move this green line all the way back to the high up here.
Oh, joy. There's a chance that we switch from a bear to a bull to a bear market. That would be fun to document and work on. Right. So last thing, let's show you newsletter because we got to get one more video recorded.
Sure. Send me an email to breakpointtrading@gmail.com and I'll put you on the list. I'll send you last week's and you'll be on it for next week. This is an interesting little cartoon. Did you read it this week, by the way?
I have not read it yet, no.
Okay. This cartoon here, this guy here is standing here with a sign that says, remember 2008.
Yeah. I do. All right, buddy. We'll get to video 2. Thanks, brother.
Doesn't this feel like 2008 all over again?
You know what? Actually, I've done a lot of research. This actually feels more like this savings and loan crisis.
Yeah.
Which not a lot of people have history of, but
right.
This is definitely more savings and loan. Because again, when was that? It's in the 80s, interest rate problem, balance sheet holes at banks. Yeah. It's very much savings and loan. It's bad.
And Volcker raising rates.
And Volcker raising rates. The shitty part about the S&L crisis first 2008? 2008 was an event. It was falling off a cliff. The savings and loan crisis was a decade of pain.
Yes, that's true.
Very, very different. All right, buddy. We'll get to video 2. Thanks again.
Sounds good.